All right, let's do this. It is Thursday, April 23rd. Let's start with the S&P. Most people have overlooked this. We did have a fractional new historic high, only by literally a fraction of a point. A couple of attempts, but still, new historic high. Broadly though, S&P did settle down almost 0.5%, back to 7108. Those candles, red. We have a little bit of a spike from the gap zone. We haven't fully filled the gap. Not quite. We were like 5 points shy, so not quite. RSI is cooling to 67. You could argue that peak RSI was, you know, last Friday. Yeah, Friday. And we have five. We have a 5 candle. I mean, I'd call it a 5 candle castle top with a micro double top from today and last Friday. Again, post title is daily momentum is weakening. Well, it might be that. Fourth day down in momentum. Friday was peak bullish hysteria, and we're weakening at the current rate. Even if, I mean, two possibilities. One, well, actually, there's a few more, but in theory, at the current rate, momentum will turn negative either on Friday or next Thursday, Friday. Again, basic downside target is ceasefire gap. These two little gaps, they're easy to get to, but really, we should get down to at least a target. Again, look at that. The 200-day, 6701. So, that's a good free. That's 407 points down. 407 just to get down to the middle of orange gap. I got to think we're going to do it. I got to think we're going to get down to at least test it. I mean, I'm not even calling to take out the late March low. I'm just looking for this. It's a kind of an intermediate scenario. This is the more conservative outlook. But anyway, momentum weakened, and but that was from a new historic high. Anything else we want to highlight? We'll go to the VIX and then do the transports. So, VIX had a little spike on the afternoon war headline. Didn't last, of course, and we did settle with a black candle. So in theory, VIX will be down probably briefly early Friday. And on the flip side, upside gap. I think we're going to print. I think we have a really good chance of 24, 25s, maybe even on Monday. And in theory, the upper Bollinger actually offers 30 right now. Momentum is notably still ticking. So despite the fact, actually, we were up 2.1%. So VIX is still ticking upwards and prone to turning positive on not tomorrow, but on Monday. Could get a big spike on Monday. Definitely the setup is there. And the one other index I want to highlight for sure is the transport. So, I mean, look, yesterday's candle was hyper bearish engulfing. We were down 3.8% today. But why was that? Because the market was skewed by Avis. Look at that. That's pure comedy. So the lunatics, probably from Wall Street Bets, started pumping this thing from around 100, and those maniacs got it to 847 yesterday morning, and it closed today down 48% to 229. I mean, that's almost, what is that? That's a decline of about what, 71% or so? 71% in 2 days. You got to wonder, all these people buying here for the last 2 weeks, they're now underwater. I mean, anybody buying up around here is down 50%. And you got to think, well, where's the next support? Around the old July high 212. So we're not far from that. In fact, actually, we did get to 207. So we did actually see a subtle bounce from the July high. But the problem is, momentum is going to turn negative on Friday and should tick down for at least a few more days beyond that. So we can start thinking, hey, what are we looking at? Maybe 150? Yeah. You have a 200-day 150. That's another $70 down. That's 30% or so. Look at the volume today. 171 million. Still going up. That's incredible. Wow. Anyway, that's why the transports has been powerfully lower today, but it's being skewed by Avis. All right, let's jump to some individual stocks and see what we got. Apple up 0.1%. Not very much, but still better than the main market. Yeah, that's a black candle. Not. So I'm guessing Apple. See, I should say my broader premise is that tomorrow will start somewhat positive, but then we'll see a downside reversal into the weekend, and maybe Monday will gap down with higher oil. Moving on. Archer, not great, down almost 5. Agnico Eagle Mines down 2.5%. Yesterday's black candles in gold, silver, and the miners played out as they usually do. Bearish. In fact, oh yeah, see, I mean, it's a bit skewy, but it's not bad. I could draw a head and shoulders here. Look at this. There's the left shoulder from January, February. Here's the head, and then I'd admit this down wave's a little bit stronger than that one, but that's okay. You could draw a neckline across here to the 200-day, and this is the right shoulder. If this is the case, 255 to 175, that's 25, $80. $80 off 175 is $95. Whoa, $95 is off the chart, all the way down under the May low of 102. Yeah, so we have a head and shoulders target on Agnico Eagle Mines of 95, uh, maybe rounded off to 100. So maybe somewhere around 100. That's 50% down. 50% down. If it's a head and shoulders, I mean, technically it's pretty good. I'm almost inclined to draw it now, but I think I'll leave it for another day. But there is one there. You can see it, right? That's a head and shoulders there. Again, look at the 200-day, 174. We go under that, take out the 175 low, down we go like a rock. Wow. American Eagle down 2.8%. Note the recent failure from the 50-day. First Majestic Silver, I was gonna say, not such a great head and shoulder. It's kind of, there is one there, sort of, right? You can see it. Bearish. AMD, new strike high, impressive. RSI is 83. That's crazy overbought. Amazon, new historic high today. Today's candle is, what is that? It is a, no wait, what is it? Yeah, it's not a black candle because we actually closed red. So yeah, but also the fact that today's candle is a little bit, it's kind of a doji candle around key resistance. So you could argue we're putting in a midterm double top here. And of course, what's the natural target? Ceasefire gap here. That's not great. American Express down 4% on a good earnings. Look at the resistance here from the last few days, from the 200-day, from the gap zone. Momentum is going to turn negative either on Friday or Monday. Bearish American Express and Vidal. Yep, that's a good chart. Again, if we take out 290, down we go. I'm guessing we do. Barrick Mining. No head and shoulders here, unlike some of the other miners, just stepping down, right? Lower highs, lower lows. Take out the 200-day, and down we go. $20 would be a pretty good target. That's 50% down. Oh boy. Oh boy, the gold mining bugs aren't gonna be happy about that. Black candle as well, of course, yesterday, which played out. Boeing, that's pretty impressive, up 1.2%. Bank of America cooling off. BlackRock, choppy from a 200-day. Blackstone down 5.7%. Yesterday's black candle played out. Look at the resistance here. This is beautiful. This was an obvious short. And yeah, why didn't I short this? I guess at least I'm not long. Momentum due to turn negative on either Friday or Monday. Yep, look at the volume today. But yeah, that's bearish. Caterpillar. Wow, new historic high up 3%. Nothing bearish there. Kamiko down 2%. We have a downside reversal because it was up in the morning. Carnival bearish. Cleveland Cliffs bearish. Coinbase bearish. Deckers fractionally higher but bearish. Disney. You could argue structure is a baby bull flag, but considering the main market, I don't think that is. I think we're going to come down to at least back down to 98. Freeport-McMoRan had good earnings, but the stock was smashed 12% on sad news of an Indonesian mining disaster. Apparently, some gigantic mudslide. God help, God knows how many people are trapped under that. I mean, they do have a lot of problems in Indonesia. I mean, it's tropics, it's endless floods and worker disputes, arguments with the government about royalties. It's a tough place to do business. So yeah, good earnings, but they smacked it. Google, fractionally down. Not much to say there. Home Depot did close up 0.2. Again, Tuesday's scan was bearishing off on the 50-day. I think we're going to be up a little bit in the morning, and I would kind of like to short this one. Natural target would be orange gap for Monday. I got to think, how much could we drop on Monday? If we get to the 10 MA install, say tomorrow morning, 342, basic target is around what? What's this level here? What is this level? 332. So I think that's a good $10 downside. That's only 3%. That's not bold. I mean, a 5% we would get you down to 325. That would be more interesting. Bearish Home Depot, but not Friday open. And I am considering it as a short. Intel closed up 2.3%. You can argue, well, you can't argue now. Uh, Short-term structures a baby bull flag. The stock printed a new historic high in after hours of around. I saw 78 printed. Maybe tomorrow it'll only open around, I don't know, 77. But yeah, it was roughly up 15, 16, 17% in after hours. Clearly, the ceasefire gap is currently off the menu. But one thing I would look for tomorrow is a black candle as of the close, and then maybe some cooling. I mean, earnings were definitely better, way better than people were expecting. Revenue growth was okay. EPS was like 29 cents or so. Some people were expecting a loss, but yeah, Intel had way better results. Again, cyclically, I guess it's got to jump at on the morning, but it's still prone to cooling back. But yeah, look for a black candle on Friday. JP Morgan cooling back. Yesterday's black candle played out. The KKR down 4%. Wednesday's black candle played out. It looks like 107.65 is a key high. So we've come up from 82 to 107. That's $35. That's about 40. It's about 45% or so. We have a rollover. Actually, we had a rollover in momentum a few days ago. So I'm looking to short this one maybe tomorrow. 102, 103 would be okay. There's a little gap, of course, from this morning. Actually, the gap's from 104. Um, MP Materials were selling off the rare earths down 8%. Microsoft struggling down 4%. We do have an upside gap now to around 432 or so. Micron, looks like Micron did break a new historic high of 493. Netflix down 0.5%. You can see we're trying to battle to hold the 50-day, but considering the main market, I don't think we can. I think we're going to come down at least to the purple gap around 85. Let's just drag that across. We'll it's a bit too dark. Let's make it lighter. Because otherwise the candles get blended out, and that's not my priority. And we do even have another gap under that. Let's label that one. See this little gap there. I accept that's a crazy low gap, considering, but you know, so we don't need that number anymore. I'm a complete minimalist when it comes to charts, and I will admit there is one upside gap. We could sort. Actually, we can't have another one of those. We'll go with a dark blue. That gap. It's a big old upside gap from there. That's that's too dark. There we go. That'll do. But yeah, short-term bearish. For Nike, down almost 2%. Again, we rolled over from the gap zone. Nike actually reminds me, of course, Lululemon, which was down 13.3%. Look at this. You know, you know the hilarious thing why this is down. So the market is very annoyed. There was news that we have a new CEO at Lululemon, Heidi O'Neill she's an ex-executive from Nike, and the market is not happy about it. Again, even before this though, look at this gigantic gap down on earnings, lower highs, lower lows, another gap down on earnings there. Chop, chop, chop. Rally. Look at that. Look at that beautiful black candle from the 200-day in mid-December. Incredible, right? And down we go again. And now we have a new multi-year low of 141. This is terrible. Bad. Very bad. Moving on. Nvidia. Down 1.4%. Today's candle is actually bearish engulfing. A recent structure is very similar to the S&P. We should come down to at least the 50-day and the 200-day. But you see the ceasefire gap is around there, 180. On just yesterday's black candle played out. Oxy higher with oil. Pan American. Black candle played out yesterday. Palantir. Again, they keep trying to push against for 200-day and they can't do it. And we're back on the slide again. Momentum has rolled over. Probably going to turn negative on Monday. Mr. Berry will be very happy. Rocket Lab down 6%. Bearish. Tesla down 3.5%. I will say, no, today's candle is not a reversal. There's nothing great there, is there? Momentum is weakening, prone to turning negative next Monday or Tuesday. Bearish. Take two. United Airlines. It had a little late day mini recovery. It was down for a fourth day, lower high, lower low is bearish. Down 0.5%, 91.25. I think there's a good chance it might be up 1% or more in the morning. I think this is a valid short from 92, 93. I mean, yeah, I could have shorted it from 105, but nope. Again, it gets real interesting if you can take out the 84s. I don't expect that next Monday or Tuesday, but maybe later next week, maybe. Stock charts computer has a target of 73 now. My target is 70. United Health, Chop, UPS, surprisingly up. Exxon a little bit higher. Anything else to highlight there? No. Let's just jump to silver, gold, and oil. GLD gold was officially down roughly $42, 1%. Yesterday's black candle played out. What a surprise. Silver, much the same. Yesterday's black candle played out, down 2.8%. Again, I'm seeing people out there still posting about gold, 7,000. I'm still seeing people talking about silver going to $200. I even believe there was a report, it was either UBS or Bank of America, who was suggesting that silver was going to go to $135 to $300 by year end. But again, I can't, I got to dismiss it. Do we want to look at commodity oil? We should, I guess. It's marginally annoying because I'm not on board this trade yet. So oil was up for a fourth day, printing a high of 98.39 on a spooky afternoon news headline. Momentum is going to turn positive, not Friday, but it might happen on Monday. And typically we get big gaps up when momentum turns positive. I refer you to this one here and this one in late February. Look at that gap. I was on board that one. Yeah. It would seem that last Friday's low was a key cycle low, and now we should go up into May. Very. Let's go to let's start backwards in USO. All right, so I've been mentioning this since Tuesday. I came up with the scenario myself. I said at the time, look, if it goes above 130, bullish scenario would be negated. If it goes under 110, scenario will be negated. Well, actually, no, confirmed. So we've broken up. Instead of breaking down, we've broken up. So this is scrubbed. I will delete the chart. Could even do it now. I'll do it. I'll do it now. Bye bye. And away it goes. It's gone. Let's dig up. So here's the original one, minus the head and shoulders. So last Friday's low was a hollow red reversal candle with a spike. 4 days up. We're a little bit choppy here from a gap zone. That's okay, but we did clear last Monday's high. So that's interesting. But the most important thing of all, one, the head and shoulders is no longer valid. But look at this. Momentum is going to turn positive either Friday or certainly on Monday. In fact, it's going to be probably flat. It's going to be around flat on Friday. And on Monday, though, it'll be up here. And in theory, Tuesday, Wednesday, Thursday, Friday. We could easily tick all the way up into early May. If I'm right, then we're going to take out that high. Not likely tomorrow, but maybe Monday. I did check the P&F target on stock charts. I think the computer's now looking for $180 in this. Computer's also looking for $132 in WTIC. So I am bullish oil. I am not on the oil train. What I want to see is some cooling early Friday. I don't care what the excuse is. I don't care what the reasoning is. And look, the 1 o'clock candle was spiky from teal gap. So that's pretty normal. 2 o'clock chop, 3 o'clock a touch weak. We're overbought on an hourly chart. Orange gap clearly out of, unless some bizarre Trump tweet or some kind of talks chatter. I don't think they're going to see that, because keep in mind again, orange gap should not happen because momentum's ticking upwards. I think that's off the menu. So, as someone who wants to go long oil, I'm thinking, well, what the hell's going to happen on Friday? Is momentum just going to kind of melt back towards the zero line, and then Monday, boom, up. A little bit of a close-up on the smaller cycles. So you saw a little spike there, cooled back into a little bit of micro ramp into more of a chop into the close. Again, orange gap. We're not going to do that, are we? That's out of range. But 15-minute cycle settled fractionally negative. So we could drop. In fact, look at the lower Bollinger. Lower Bollinger offers, well, let's call it 131. That's $3 down, which is about 2%. We could see oil down 2% early Friday, and I would be a buyer. Now, of course, I could be wrong. I could be wrong, and we could go down to orange gap on Monday or Tuesday. I'll take the risk, probably. And on a 5-minute cycle, which of course is really narrow time frame, you can see we actually maxed out just before 2 o'clock. But we're still above the zero threshold on MACD line. So if oil has an initial gap down on early Friday, it'll be down here, which would be the lowest level since, what would that be? Tuesday afternoon, right? Yeah. So again, that was Tuesday afternoon. Cycle low, and then it spiked. So I'm looking for the most ideal setup. So I'm going to hope that we can I would accept anything tomorrow morning. Oil down 1%, 1.5%. I would be a buyer on the premises that USO might spike on Monday. So yeah, I think for me, this chart, the daily momentum, for me, this is like, I need to get back aboard this train. I really do. Either tomorrow morning, I mean, tomorrow morning, my view would be the time to do it, early morning. Now, of course, if oil, let's be clear, if oil is up in the morning, I will not chase. I would look to buy back on a cooling wave. But I'm going to hope that we open down. All right, I'm getting tired. It's been an okay day. But yeah, I wish you a good evening, and let's hope that Friday morning, equities are up a little bit, VIX is down, oil is down, and then I can go shopping for the weekend. That sounds pretty cool. Good night.